The Co-op Budget Committee is returning from its non-public session. And who do we have with us this evening? Great. Just going to close up some of my notes here. So we just completed a non-public session with regard to filling a vacated seat of a Hollis member. And at 6:45 p.m., we entertained the resignation of Tom Enright. So with 2 available seats, we are going to consider the 2 candidates who we had present this evening and take a vote on their participation on the Budget Committee to replace both the seats of Lauren Ridstrom and Tom Enright. The only people voting for those individuals are Raul and myself as the elected Hollis members on the Budget Committee. So, Raul, why don't you make a motion?
I'll make a motion to nominate Tony Stenisi to replace Lauren Ridstrom's.
Okay.
In Lauren Ridstrom's former seat.
This is so odd. I'm seconding it. And we can have some discussion among the committee, but we could just, we did have some discussion in non-public, so we can take that vote.
Okay.
All those in favor of Tony replacing Lauren?
Aye.
Great. And for the vacancy left by Tom Enright?
I'll make a motion to have Tom Whalen replace Tom Enright.
I'll second that.
Seat.
And all those in favor of that motion?
Aye.
Aye. So both Tony and Tom will be seated members on our Budget Committee. Congratulations, Tom. Thank you for sticking around. You're welcome to join us here at the table. Unfortunately, you can't be a voting member this evening until you're sworn in by either the moderator or the town clerk, but we're happy to have you join us for this evening. And just for some background, we did mention to Tony Stenisi that we were going to be going a little bit long, and based on his time frame, he just couldn't stay for the remainder of the meeting. So I'll make sure I communicate to him that he was successful in being a membership and being a member, and then how to move forward with speaking with. I'll follow up with the moderator. He would have been available this evening, but he's at another meeting and wasn't available to do the oaths of office this evening. So. Okay, with that, I'll introduce Kelly Seeley, our business administrator, who's joined us this evening, and Tim Green. Why don't you come join us? Of Robertson Green, our longstanding auditors. I'm going to switch up the agenda a little bit because, especially for you, Tim, I know you've been waiting for a little while. So typically in August, we review the audit of the prior year. So what probably just concluded this summer was an audit of this most recent fiscal year, FY21. You're still in the process of finishing those calculations and putting together the audit report. So what we're looking at is the audit report of the prior year. So the year that ended with the remote learning in FY20 of when we first had that first COVID remote period. So that's the year that we're talking about. I did share with everyone a copy of the financial report earlier in the spring, and just recently forwarded it to us. And so, Tim, if you could kind of lead us through our annual kind of overview, that would be appreciated.
Sure, certainly. As you said, this is June 30th, 2020. The fiscal year ended June 30th, 2020, excuse me. And as you said, we were in the district in the beginning of August to do the fiscal year 21 audit. Still got some pieces to wrap up on that. There's also this year, just for your information, with the change in the food service program because of COVID, as well as the extra federal money that came in because of COVID. The co-op does have a single audit this year that it's in process right now, compliance audit. So that will be you'll see a different report next year when I come to present that. So slightly different, just a couple extra.
Quick question before you start.
Yeah.
The report for this current year that we're in, when would that be available for the first time?
I'm hoping we can get this wrapped up by the end of the year this year. Looking at the dates, typically we get it out by the end of March, and that's also the deadline for the single audit. So worst case, we need to get it out by March 31st. Love to have it earlier than we have in the past. That's always a goal. So
because it almost seems like over a year later is kind of, we're so far removed from it and doesn't have the same impact.
Sure. Yeah, I mean, this report was issued in March, so it's just, we're still 6
My
months
fault, right.
after the.
No, but also, with our time frame, we had a delayed meeting into April. Did we even meet in May? No, we skipped June. So just with the way our agendas fall and things like that, so we can look, if it is available, maybe we can look to shift some agenda items in the
Right.
spring
So maybe
going
have it
forward.
report
Yeah.
come back to us sooner.
Sure.
So as always, the first report within this is the opinion that we're giving you on your financial statements. The bulk of this is your financial statements that we assist in preparing, and that's kind of a separate task outside of an audit. We have standards to follow to maintain independence when we do that, but it is something that's common that your auditors kind of tend to assist in drafting. So anyways, so the first 2 pages is the opinion letter, and as always, or has been since I've been coming, it's a clean opinion across all of your opinion units. You had, for 2020, you had governmental activities, which are always a major opinion unit. You had multiple major funds, which represented your general fund, your food service fund, your grants fund, your ongoing capital project, and your permanent funds. So almost all of the funds within the district classified as major. There's a couple smaller funds that are non-major. I can just highlight those so I can get to that page. Actually, it's basically your student activity fund and miscellaneous grants fund. So after our opinion letter is the management discussion and analysis. That's drafted by the business office. We make sure the numbers correspond with your actual financial statements of which we'd audited, but we're not assisting in drafting this report at all. We're just making sure that we'll read through it, make sure that the data and everything makes sense and it's kind of an accurate representation. So can't speak to anything within that. As far as, but it is actually a very useful tool for the public, because I know I recently went to another board meeting where, after going through all this, they said, well, how is someone supposed to understand this? And I said, basically the answer is, it's not necessarily written for everyone. It's written for people who have read financial statements in some respects. It tries to be as straightforward as can be, but there's just a limit to what it can be. So I think the MD&A actually does a really good job of going into detail, for example, for budget to actual variances or something like that. That is a really helpful.
Yeah, and it was a good summary given the time frame to, put us back in the mindset of where we were for that year and, look back at those, specific items and events that occurred, so.
So I'll just try and run through the exhibits as concisely as I can. There's a lot of data, but exhibits 1 and 2, this is your government-wide statement. This is the statement of net position, so it represents all of your funds combined, essentially, and it's also on the full accrual basis, so it's very similar to a business statement versus anything else that comes in governmental accounting. So this one includes your capital assets, this includes your long-term debt liability, it includes your pension liability and your OPEB liability. So with those significant liabilities, you can see that the total net position at the end of the year for the cooperative school district was $2,158,000. The components of that are broken out into 2 main components. You can see that there's your net investment in capital assets, so that's the net capital assets less any related debt, which is essentially all of your debt would be related to capital assets. So you can see that that's almost a positive $15 million value. And then you have your deficit unrestricted balance. The reason that's mostly a deficit is because such things as your net pension liability and compensated absences payable and your OPEB liability, those really don't have a corresponding asset. So it's kind of a hole that you really can't get out of on paper. Your budget's on a modified accrual basis. Your retirement rates are factor in that liability. So essentially, it's a liability that will, in theory, be reduced over time. That may not be the case in actuality, but in theory, that's what it represents. So Exhibit 2, the change in your net position was about an increase of $200,000. This exhibit details your expenses and the corresponding program revenues. Most of the school district's revenues are general revenues, based on property taxes. Those aren't targeted to specific functions. But you could see that you went from 1.9 million up to 2.1 million. Exhibits 3 and 5, these are your governmental fund statements. So this is your modified accrual basis, which is essentially current resources. Here you can see that in the general fund, you had total assets about 2.5 million. You had liabilities of just under 200,000, and you ended with a total fund balance of about 2.3 million. Of that, you had some of it in non-spendable balances that represented prepaid items. You've already spent the cash, but you don't have an expense until the next year. Committed fund balance, that actually represented your expendable trust funds, which are grouped into the general fund for reporting purposes, along with any warrant article balances if you had it. Unassigned, those represent purchase orders, encumbrances being rolled forward, and then your remaining unassigned fund balance of 1.4 million. You can see your other major funds as well. The food service had a positive fund balance of about 200,000. Grants fund, typically the nature of grants is you don't expect to see a fund balance. Your assets should equal your liabilities because you only record a revenue when you have an expenditure. Capital project fund, I know that's winding down, so you have about a $100,000 balance remaining on that. And then your permanent fund, which represents the school funds that are held by the town of Hollis. That currently had a fund balance of about 470,000. Again, your other governmental funds represented the student activity funds and the miscellaneous funds. Combined fund balance for those is about 350,000.
Could you just talk a little bit more about the permanent fund? I don't think I've ever asked about this. What types of items are, like, why is that held by the town?
Because typically it's an endowment that has been given to the town for the benefit of the school.
Okay,
So, and then by state law, any endowment is held by the
Yeah.
town trustee. It can't be held by the school itself.
okay.
Yeah, and then so that's you'll see a non-spendable fund balance of about 323,000. That represents the principal on that endowment.
Do you have a similar amount for Brookline?
Probably I'd have to look.
Oh, okay.
Yes, I believe
do,
they have some
yeah,
permanent ones.
The Dodge,
Dodge, yeah.
yes.
I know, I mean, you can pull those out too from the MS9 in the town reports as well.
So but these would be co-op specific endowments?
Yeah, but when he mentioned like
Oh, held
450
by the towns.
for
You're
Hollis,
so you're saying.
I was expecting there would be some amount for Brookline and the
No.
total the total is
Interesting.
450.
No, it's just for the co-op.
These are literally on the MS9,
Okay.
you'll see they say high school funds.
So you should have said co-op, not Hollis, right?
But I guess that's the
Town.
question,
Town
are they
Hollis
held
is-
by they're held by the town of
They're held by
Hollis?
the town, but
Because that's
they're-
how the endowment reads,
Yeah,
that it's
that
held by the
is
town of
the-
Hollis.
But there is no endowment for Brookline?
No,
Well, there
Yeah,
is, but
just-
it has nothing to do with the co-op.
it's like for the Brookline School District, might have its own endowments, but the
Right.
wording of the endowment is that it's held with Hollis for the co-op.
And the town of Brookline holds that endowment.
Okay, I hear you, but,
That shows up on the
Yeah.
Brookline's
Yeah.
financial statements.
Yeah, yeah.
all right, never mind.
Exhibit 4 and 6, these are kind of crosswalks between your modified accrual basis and your full accrual basis. Between the, you can see on Exhibit 4, again, your capital assets is about $19 million. You had accrued interest on the full accrual basis about $100,000. Your long-term liabilities, $23 million. Bonds and notes, pension liability are the main ones, are the big ones, OPEB liability as well. And then deferred outflows and inflows of resources, those also correspond to pensions and the OPEB liability. All those figures come off actuarial reports that we obtain. We review for consistency in the methodology, but we're not an actuary, so we do rely on their numbers, and we put the numbers.
And so that's something, the net pension liability and the OPEB liability, those were items that, I feel like it's within like 5 years ago, there was a move to have them included in audits and financial statements.
Yeah, pension came first, and I'd probably say at least 5 years ago for that. OPEB was soon after, then they changed the methodology for OPEB. I think it was, I actually made some notes on that. I believe it was, 2 years ago. Well, 2 years ago from this report. It used to be a forward-looking balance. You kind of calculated your liability. You didn't put your liability on the books. You only put the amortization of that liability to pay it down by over 30 years. And then 2 or 3 years after they initiated the first one, they said, the whole liability just needs to go in there,
Right.
because you do with pension, it's kind of the same balance.
I had to ask that for Lauren, because he was always the one who asked about the OPEB.
Again, Exhibit 6, this is the crosswalk for your revenues and expenditures between your modified accrual and full accrual. So you could see during fiscal year 20, there was a net addition to your capital assets of just over $1 million. You paid off just over $600,000 in your debt. You added a capital lease of about $50,000. And then there's some change in your termination benefits payable and your compensated absences payable. And big changes in, and about $1 million change in how you factor your pension costs based on the general fund, you're recording your contributions during the year. Full accrual, you're taking to factor that change in liability and change in those deferrals. So there's actually an additional $1 million expense when you do the full accrual accounting of your pension balance. Exhibit 7, this is the general fund schedule, statement of revenues, expenditures, and changes in unassigned fund balance. This is the budgetary basis. The only difference on budgetary basis for schools typically, there's two main differences. If you have a capital lease on GAAP, which is exhibits 3 and 5, that's a GAAP basis. That shows the full capital lease shows as capital outlay and a revenue source equivalent to that amount. So you see an increase in expenses. Whereas in the budgetary basis, you're just factoring in that lease payment when the first year that happens. So it's not, your capital outlay doesn't reflect that full value of that lease. As well, in this Exhibit 7, the actual column does include your encumbrances at year end. So those aren't expenditures when you're talking accounting wise, because goods or services haven't been received, but it is a budgetary expenditure because it's coming out of that appropriation, not the next year when the work or services will be received. So on this exhibit, you can see you had actual revenues of $23 million, just over $23 million, which was a slight positive variance above what was estimated of about $140,000. And then your total expenditures was just over $22 million, which was a positive variance under your budget of about $1.5 million. You had other financing sources that were expected based on your budget. You had a transfer out of just under $167,000, and you had a small transfer in. You had an increase in your non-spendable fund balance and an increase in your committed fund balance. So the results for the year, you can see your unassigned fund balance to start the year was just over $600,000, and your unassigned fund balance to end the year was about just over $1.4 million. Exhibits 8 and 9, these are budgetary statements for your other major budgeted funds, food service and grants. You can see on Exhibit 8, the food service had a positive net change in their fund balance of about $50,000. And the grants, again, you can see the activity. You had about $300,000 in expenditures for grants. As I said, you don't typically expect to see a fund balance. So, notes to the financial statements. I don't highlight a whole lot here just because it's if you read through it and had some questions, we can go over those. But otherwise, it tries to be very self-explanatory. Some of our exhibits, starting at Exhibit 10, which is on page 42, is the schedule of the school district's proportionate share of its net pension liability. You are required to show 10 years, so as you get to 10 years, as mentioned before, you can see fiscal year 2014 was essentially the first year you reported your pension balances. So once you hit 10 years, you'll just have a rolling 10-year schedule of those balances. You can see the changes in your net pension liability. When it first went on the books, you're about 12 million. Now you're up to 16. That's basically, to simplify it. I mean, it's more complex than that, but to simplify it, your proportionate share is based on your contributions as a district, as a percentage of the total contribution. So you contribute $1 million out of $100 million. 1% of the liability is also yours. They're not taking your contributions and subtracting it from your liability from the year before. They're just recalculating every year what your share is. So as I say a lot, if you wanted to pay that down, you wouldn't be. You would be contributing to everyone's share. So they take 1% of the big, the extra payment you make, or whatever your ratio is. So.
Tricky.
Exhibit 11 is a schedule of the contributions to this pension system. Exhibit 12, this is your OPEB schedule, the changes in your OPEB balances. So you can see you've had 4 years under the latest, the current OPEB standard. As I said, I think a couple years before that you were reporting balances, but with the change in the standard, you're only showing basically your balances under that new standard because it was just not comparable. So for the last 4 years, you've been reporting these balances. And you can see that that balance has, after the first year, it's remained relatively consistent. These balances are two parts. You have your medical subsidy through the pension system, which that is no longer being a program for new entrants, so that balance is not fluctuating as much, I'd say. And then your implicit rate, which the district hires an actuary to do their own rate. They hire one for all 4 districts, but that's based off of the implicit rate subsidy, which is the benefit that current employees are earning by being enrolled in the health insurance system, through the district, and because they currently would have the ability when they retired to purchase it through COBRA, to no expense of the district, no current expense of the district. However, that employee would be receiving a benefit because their rate would be still within the pooled rate of all the current employees. So it's a benefit on paper. That's why it's explicit, or an implicit rate, excuse me. It is certainly required, and it is a larger number when you can factor in how many employees you have and how cost trends and so on. Again, actuarial requirements for that, and they're based on their standards. Exhibit 13 is the schedule changes to the OPEB liability and related ratios. Here, Exhibit 14, this is the non-major governmental fund schedules, like as I said, student activities and your miscellaneous funds. And then Exhibit 16, 17, and 18, this is just a further detailed breakdown of your budgetary basis statements for the general fund. So here you can see where your significant positive or negative variances for your revenues, actual to estimated, as well as your appropriations and beginning encumbrances, less your expenditures and encumbrances rolling forward to the next year. You can see that to start the year, about $56,000 was carried forward from the fiscal year 19 budget. So you add that to your current appropriations, and then less your expenditures of just over $22 million, as well as the encumbrances to fiscal year 21 of just over $226,000. Again, getting to that variance of the positive variance of $1.4 million. Exhibit 18, the schedule of changes in unassigned fund balance. Here you can see it's probably the best statement. It's really the best exhibit. You can see your beginning unassigned fund balance, $600,000, appropriated $267,000 to trust funds, and also used $489,000 to reduce these school district assessment. Your revenue surplus and your unexpended balance of appropriations gets added back, so that was almost $1.6 million. And again, you had increases in those fund balance classifications, so when you increase one, you decrease the other, and that's how you get to your $1.4 million. Student activity fund schedules, informational, always not required, but certainly a good schedule to have. And then our management letter is always attached at the end. We had one comment. We did find a reimbursement to a staff member for purchase of books, which in and of itself was not outside the policy. However, certainly just in general, that type of reimbursement is certainly an area of fraud or misappropriation. So it's certainly something that I've seen other examples where significant purchases were made, not in this district, but significant purchases were made by a staff member, and then the staff member gets reimbursed, and then they just return the books to the vendor. And so, again, that's theft of, obviously, theft of the assets. So, always be business office boards always have to be diligent on fraud assessment, fraud risk, what other fraud risks we have, what are the fraud risks in the budget process, what are the fraud risks in management process. So it's always something that is a responsibility of the district themselves. We're not a control for that sort of activity because we're just going to come in once a year after something's already happened. And,
Yeah, I think in the past week heard from like a cyber standpoint, some of the very unfortunate instances that have taken place even in New Hampshire involving other New Hampshire school districts with cyber fraud, you know, aside from, you know, just the everyday management issues that we deal with. So it's just, you know, a whole other level of things to be concerned about. So.
Yeah, and that's always, I mean, I would say, obviously, it should be, certainly discussions of those situations and say, well, how could that happen here, and what, you know.
Is there a database somewhere, like lessons learned or examples of fraud that districts could actually pull together to understand? The
There's
kinds of
certainly-
examples?
There's certainly stuff out there, yeah. I mean, I don't have off the top of my head, but if, you know, I could find, there's certainly stuff that I rely on in my industry as training and examples for us too. So yeah, there is. We could find that.
So I know in the grand scheme, it's a very minor thing, and as you said, the student activities information isn't even a required, aren't required statements for the audit itself. But again, minor in the grand scheme, but just wondered how things like, so I noticed a couple of negative balances in a couple of the accounts, and you know, overall the balances are fine, and I think what happens going forward is that, you know, certain programs continue their fundraising, it offsets things from prior years, and you know, the various clubs and organizations move on. But the one that stood out to me, and I just didn't know how this would be addressed, and it might be addressed by a gift from another class, was that I noticed one class had a negative balance for its ending balance, and other classes, like the class of like 19, 20, 21, have positive balances. So I wondered in that case, if a class that's already graduated has no means of fundraising, you know, how do we kind of reconcile those types of balances?
Well, go ahead.
I didn't have an answer off the top.
Oh, okay. Well, I was just gonna say that I forget what the time limit is, but there's a certain amount of time that, that if you still have funds in that class, you know, like 5 or 7 years or something like that, then we put that into a pool of money.
Oh, okay.
That will cover negative balances that are reasonable. I mean, there may be negative balances that we would expect to have that money recouped.
Right.
For instance, during COVID, we did have some clubs that experienced some negative situations, and we were able to use those funds.
Yeah, and I even looked at some of
cover.
like the field trip things. I know, like, you know, probably the 8th grade trip was planned, and there might have been some, I mean, obviously we refunded families.
Yes.
But there might have been expenses just incurred as a result of, you know, having the planning and things like that.
Right.
So yeah, understandable in those cases. And yeah, it was just like I said, that one was like, oh, I wonder how that works. But that perfectly.
Yeah, and
explains
I mean, it's a very good point too. The nature of student activities, you should not have deficit balances. You should not really allow them. I mean, it's not an issue. It was, like you said, there was a lot of extenuating circumstances in a lot of these accounts. But it was, so there should be policies that address negative balances, and especially with classes, as you say, you know, your policy may allow for a few years. I mean, it's never. I always encourage you a school district to get rid of those class balances when they're gone as fast as you can.
Right.
You don't want to hold on to the money. So, because I know some classes prefer that because they may not have people in the class that really want to hold on to the money when they leave.
Right.
But it's certainly not the district's responsibility to maintain that money anymore once it's a. So I mean, these certainly policy areas should always be reviewed to make sure that they're going to address these issues. So.
Okay. Does anyone have any other questions at this point?
No.
As usual, Tim, you're thorough and really do help us understand it. I mean, at one point, maybe we'll get through this and have more questions, and as we get, you know, kind of keep hearing things year after year. But I appreciate the kind of focus and attention on unreserved balance and the explanation of how those exhibits are working. It's something that's received a lot of attention over the last few years for obvious reasons, and you're right, it's a really nice, concise view of kind of how things work from that perspective.
So what is the overall grade? Did we pass?
We passed, as always, yes. I mean, I was looking comparison. I mean, again, fiscal year 20 and probably 21 are very uncomparable to past years. So, I mean, you did have a jump, almost double your fund balance, but I think that is easy to point out why, and as your MD&A does certainly discuss why you had such good positive variances in your budget to actual. So.
Right. Great. Well, thank you so much.
You're very welcome.
If we think of anything, we'll follow up.
Thank you.
Okay. So one of the other documents Kelly shared with us was a summary of the CARES and ESSER grant funding that we had received for the year. We typically have a monthly results overview, but given that they just finished an audit and are tying up their year end, Kelly didn't share that this month, and we'll have that probably in September.
Well, hopefully, possibly October, but I'm shooting for
It's
September.
coming. It's
yes,
coming.
Definitely.
So what she was able to share with us is the update on how our CARES and ESSER funding broke down and the status of that. So maybe Kelly, if you could just walk us through where that funding,
Sure.
how that grant usage stands, that would be appreciated.
Yes, I'd be happy to do so. I'm actually going to take you, if you're looking at it, to the second section there, which is related to our expenses.
Can I just jump in for one
Yes.
quick second, since we have a new member? I just want to mention that the district as a whole does not receive a lot of grant funding. And even in the framework of the CARES and ESSER funding, we really didn't receive a lot of grant funding. There were various different levels we received, and while one component of it was consistently based at $200 per student across the state, every other component is based on our free and reduced and Title I funding levels, which are minimal in this district. So we have several levels of funding, and that involved, we're up to, I think, ESSER 3, as well as there was gopher funding from the town of Hollis, which was really helpful because we didn't qualify as a district, so we were able to piggyback on towns. And then these supplemental relief efforts. So we have, various levels of funding, but in total, I think, Kelly, what you're talking about is how $340,000
Right.
was spent.
Yes, that was
And
the
then
total
you're going to
spend.
back that into the next levels of CARES Act funding that we'll be seeing.
Right.
Okay, go ahead.
Right, and the categories that you saw, things like facilities, rentals, modifications, there's another category for supplies related to cleaning, another one for staffing, et cetera. Those are all coming from the state based on the application that we had to submit to get that funding. But over the course, we could go back to March of 2020 through December of 2020, and that's the only time frame that we could get funding for. And during that time frame, as Darlene said, we had about $343,000 in expenses, and we were able to recoup all of those funds except for $3,834 through the use of the different funding sources that Darlene mentioned. And the first one was called the CARES Act, and we got $20,000-ish with that round. Then, as Darlene said, we were able to use the gopher money, which is town money. And the good thing about that is when we got to some of the other funding sources, we only got a percentage of that funding. So we got that free and clear of that cut of percentages. So
I just want to interrupt for 1 second. Tom, I just forwarded you the agenda package that everyone is looking at, so you'll have a copy of that. I just thought to do that. I'm sorry, I didn't think of it when we went through that whole audit. But anyway, that's the summary that Kelly's talking about is in one of the attachments.
Yeah. So the gopher funding was, a real bonus for us to be able to use that, and thankful to the town to allow us to do so. As Darlene mentioned, that first one, SRF number 1, was the one based on $200 per student. We received $248,200. And then the last one, the SRF number 2, is $7,967. Now, that would have, if we didn't have the gopher fund, it would have been higher, but it also would have been cut down by the fact that we only got a percentage of that particular funding source. So for a total, we got 339,000, spent 343, and only had to eat, if you will, 3,834,000. And then we were able to, for January 2021 through June of 2021, we did incur additional expenses, and those are on us, basically, because that funding all those funding sources were not extended beyond December 2020. And when we look at that, we had 107,000 more dollars that we spent for COVID-related expenses during that time period. And we were able to cover those expenses in the FY21 budget. And then there's additional funding beyond that that isn't really tied to this same time frame. And this is available for obligation through 2023, the ESSER 2 funds are. And we received $60,000. And as Darlene said, you know, we have other school districts where we're getting $60,000, you know, $1.2 million. So that gives you an idea of how much we don't get. And then ESSER 3, which is we're just now applying for through the grant management system and hopefully getting approval soon. The co-op received almost $135,000. So those two funding sources, the ESSER 2 and the ESSER 3, come to $194,914. And, you know, administration is discussing how to use those funds, and I think they will primarily end up using them for learning loss. That will be the priority that the district, all three districts really, are planning to use their funding sources for. There may be other things that we put in there as well, but it will be pretty much focused on learning loss.
Was there any expanded summer programming?
There was, yes.
That some of these funds could be used for?
ESSER 2, there's a piece of that $60,000 is paying for some of that, yeah.
And I'll just add that the ESSER 2 and the ESSER 3 funding come with different, I hesitate to use the word restrictions, but different requirements to qualify, like construction projects and things like that. Right. There are a few more hurdles to jump through for anything related to construction in buildings. As you said, that's predominantly for districts who are receiving those grants in the millions of dollar levels versus, you know, just under 200,000. There's not a lot of construction we could do here for that amount of money, but there are certain requirements and restrictions that are put in place for those specific grants, and as well as a requirement to address learning loss and focus a significant portion of the funds toward that. So the fact that we could, you know, maybe use the majority of those funds for that would be great. I wonder too if we were able to take advantage in preparation for the upcoming school year, some of the FEMA funding that covered PPE.
Well, as you see, the supplies related to PPE, that second line there, we only had about $6,000. So
okay, so everything that we would have needed, you know, we were pretty much covering through the budget, or just covering for for extra cleaning and things like that.
We did not pursue that, no.
Okay.
But I will tell you that this is not really this kind of funding, but E-Rate has a program right now for funding connectivity issues and also devices. So we haven't been approved for this, but we've applied for it based on a survey that went out to the parents during registration. We very likely will be getting, and this is across all three districts, I don't remember the breakdown for each district, but 551 Chromebooks that this program will pay for. So that should bring most of our kids on close to a one-to-one Chromebook situation. So we're just waiting to get that approval.
What's the sign here that said pick up your Chromebook?
Well, there you go. Although,
where are they?
Unfortunately, we'll have to, I mean, I don't think the approval comes until mid-September, I believe, and then at that point we would purchase and be able to get those. So it's not going to be a start of the school situation. But
Is
looking
there a,
forward
what type of like liability waivers, or do we have, I should say, do we have the families sign any liability, documents of liability on the Chromebooks? Like, so what happens if they get ruined or?
Well, and we sent out a lot of Chromebooks this past year and had a lot of fear about that. And we do have them sign something, but, things are somewhat hard to enforce at times. And we are all like in absolute shock that I think there were maybe 3 Chromebooks that came back that maybe aren't usable, or at least they need repairs. Only 3,
That's amazing.
That's just unheard of.
Sorry, repeating the grade.
Yeah, that's it, yeah, and we got them in the dish room washing dishes.
Do you have insurance available?
We're covered under insurance, and that's partly why I assume we won't go too hard on, certain cases. But, I mean, we really didn't have a situation that warranted
Yeah,
extreme
there were some
measures.
districts who, well, at least the newspaper articles, I'm not sure what might have been exaggerated or not, but there were some districts
Oh, I'm
that had
sure,
very
yeah,
significant
no,
issues
well,
with their.
that just is testament to our great kids,
Absolutely.
and our great families.
Mhm. Great. Well, we'll look forward to seeing how the next $195,000 gets spent.
Yes.
Over the upcoming year. Thank you. Does anyone else have any questions? Okay. Cindy unfortunately had to leave. She had notified me about that earlier. And I just wanted, she gave me a couple of items to talk through. I did see some of the last school board meeting, and I know Tom was did attend it. So at the last school board meeting, the primary topic was the opening plan for the kids who start school next Thursday. I think the 7th graders and 9th graders start on Wednesday, and then the full contingent of students comes back on Thursday. They will be mask optional, correct? There was a lot of public input at the meeting about the decision the opening plan, the decision the board was going to make. So for the co-op, students and staff are mask optional. For the K-6 schools, I believe in both Hollis and Brookline, there is a mask requirement. That will be, considered as the year continues, as cases are managed and things like that, as will the mask optional policy at the co-op, depending on caseloads and things like that. So at least the students will be starting with a mask optional policy. The board also talked about a public hearing and special meeting to address the articles of agreement. If you recall from the spring, there were several kind of dot the I, cross the T items that need to be addressed with the articles of agreement. It is not designed in any way, shape, or form to address any significant change to any element of the agreement, the articles of agreement for the co-op. We're not changing operations, we're not changing grade levels, we're not changing which towns comprise it, we're not changing composition of the board, we're not changing an apportionment formula. It really is to just clean up the things that our lawyers came back and said, this is referring to like the Hollis area school, and that's just not what it's even called anymore. So it's really to bring it up to date. And I think I feel like there was one decision that led the charge to the articles of agreement.
Oh, yeah, I think there's wording in there on some sort of meeting schedule that's supposed to happen.
Yeah, something like that. So something precipitated the review of the articles of agreement.
Yes.
And to make that change, they said, well, while we're doing it, let's just fix this and get it all right. So there was some, and it's been brought up before about this meeting taking place, and it was originally considered an item that was considered for what ended up being the April town meeting, but just felt with all the topics on the table with that meeting, it was just not the time to even bring up and address even something simple, simple grammatical changes to the articles of agreement. So, but the only way you can address the articles of agreement is through a special meeting or a town meeting. So that's why we're left with the special meeting That's going to be on October 5th. And the public hearing will be before, the public hearing, which like precedes the special meeting, will be at the September, I'm on my phone, at the September meeting, which it will be, what, the 1st, 8th, the 15th, the third Wednesday of
something like that, yeah.
September. So they discussed that.
And just to clarify, you keep saying town meeting, but I think you mean the school district, the co-op school district meeting.
I do, yes, I mean the school district meeting. Every time I said town meeting, I meant school district meeting. Yes, you're right. So the only place to address the articles of agreement is at the annual school district meeting or a special meeting. And so they're gonna have a special meeting. Thanks, Brian. There were some other policy items that the board discussed, but the focus was really on the opening plan for the district. That was really where a lot of the time and attention was spent. Cindy also provided information that Bob Olet, who has been with the district for over 20 years, has submitted his retirement letter effective with the end of the year. And that's about where we stand.
Was there any discussion on the lawsuit pertaining to masks wearing, or is that an issue?
It is not an issue. The case was dismissed.
Okay.
Maybe when we talk about the next results, we could just talk about any of the legal costs that were associated
sure.
with that.
Yep.
That would be great, but that's been dismissed. So that's the school board update. I don't know,
I had a question earlier. I thought about this. When there is money to be given back to the district, how does that, what is the mechanics of how that happens?
It just reduces your tax rate.
no,
So
he
there's no
mean,
transfer of funds, no
No,
check
no
writing,
money
none of
goes
that?
anywhere, no.
Okay.
Oh, so you're saying that, when we have unassigned fund balance that we return to the towns,
Yes.
what actually happens is they just reduce their monthly payments over the course of the year,
Correct.
basically, to us.
Correct,
Ah, interesting. I did not know that.
yes. No, we do not pay
Did not
anyone
actually send
anything.
it. Okay.
Yeah. It's all done on paper, and then
Yep.
voila, your tax rate
Yep.
comes out.
All right.
Thank you.
You're welcome.
Interesting.
Yeah,
the next item on our agenda is FY22 budget planning. I'll just give an overview of the assumptions I know to date, which are that we are not negotiating contracts. So the contracts have been negotiated. In the case of the professional staff agreement, it was Sanbornized. All 3 years were approved at the April meeting. In the case of the support staff contract, it's been negotiated. We have estimates of the cost, and that'll be included as a warrant article. So there are no active negotiations for any contracts this year. There will not be another change to the NHRS retirement rate. We know what that is since it's set in 2-year increments, and it already had a huge jump going into this year's budget, so we know what the rates are going to be for that.
Retirement system.
Yeah.
Okay.
I'm not aware of any, I will be continuing with technology replacement, although we'll see how kind of some of this E-rate financing helps or
Yeah.
contributes or offsets some of that. We'll be continuing with the capital, kind of on the capital maintenance plan of, next sections of roof lines. And there was some approval, I think we talked about this at the early July meeting, of what the school board approved to use from the unreserved fund balance. I'll have to pull that out again because so some of the things that they were going to be covering kind of move us further down with money that was originally in the unassigned fund balance, will move us kind of further down a path on the capital maintenance items.
yeah, I can probably remember most of those.
So there may not be a need to bond major capital projects for
I
next year?
don't know about
Well,
that.
it depends on, there's a lot of opinions about that.
Right,
And
right.
so there's a lot to do, so you could easily bond things to cover all the things that need to be done, but it certainly makes it a little less important what the school board decided to spend some of that money on, yeah.
But that's a good point, and it's a good discussion item for September, so that we don't get into the budget planning process and make a recommendation as a budget committee that says, hey, it would be great if you would consider a
Yeah.
bond, but we say that in November.
Right, we
Isn't
need
the time to
time,
make a
yeah.
statement
Right.
like that. So, I think one of the other areas that we can look at too is, the adequacy aid, estimates. There was a change to, how the formulas are being calculated because of, average daily membership and free, and again, free and reduced price lunch, which doesn't really affect our district significantly, but the average daily membership numbers might. And so I believe with the latest, calculations, they might be considering using, the higher average daily membership of 2 years, to help the districts, along. So we'll see kind of how that shakes out in the estimation process for the upcoming year. But other than that, I'm really not aware of anything.
I'll just mention one thing that the board did approve to use FY '21 funds is a study to look at how an enrollment increase would affect the
Yes.
buildings, and also an energy audit of both buildings as well, because we're doing the same thing in Brookline, and what comes out of that, the evaluation does not cost the taxpayers anything. It would just be if it comes to, if they approve the vote based on the presentation of the company that we hired, then it would start costing the district.
And so what's the time frame for, reports and recommendations from each of those studies?
I believe they decided that September would be when they would get some sort of a report to start, but the
Okay.
school board needs to, decide how serious they are about it, whether they want to put it forward for
Right,
the next fiscal year, or do they want it, the one after that, so.
Mhm. okay.
Has there been any change in the status of the housing proposal for the worker housing? That you're aware of? I don't know.
In Hollis
How's
here,
that in Brooklyn?
in Brookline, I believe it's not going forward, but I could be wrong about that. I had heard that that was now up for sale, that property was up for sale.
Because they restricted permitting for it? Is that-
Yeah, they did. I don't know anything about the Hollis housing, though.
Okay, so we'll, interesting, yeah, those are all very impactful items. So but I'm glad that they're looking for something in the September timeframe, because that
Yes.
just aligns well with the whole process.
Yep.
So
Okay,
we're
good.
gonna have a running start then, really?
Jumping right in, jumping right in. Okay, I'd like to go back to a couple of, does anyone have any other questions or anything for Kelly at this point? I want to go back to the one item we missed was the approval of the minutes from our July 1st meeting. Was it July 1st?
Yeah, July 1st.
July 1st. So those were circulated, and at this point, I'll take a motion to approve the minutes of July 1
I'll make a motion to
by
approve the minutes
Raul,
of July
seconded by Dave. All those in favor?
1. Aye.
Great. Now we're down to 1, 2, 3.
Yeah,
I know, we're down to
we're
5, 0,
five.
0.
We have a quorum.
I've kept for, Dawn McMillan does our minutes, so I will I have the times of when everyone left and arrived and everything else, so I'll let her know at this point who was left for that vote.
By the way, I just wanna say, she does a great job.
Oh, her minutes are
You know,
fantastic.
I went through it, and I found one extra space in one spot, and I found an extra letter in a word, and I figured that wasn't worth.
No, not that everyone didn't do a great job when they had the responsibilities, but it is quite nice to just, I think
Right,
everyone would
it's
agree,
unbelievable, and
to have somebody
There's,
be managing that. She
agree.
provides me with
But-
outlines of, motions and things I have to do before I get here, so it's actually quite nice to
And
just,
she does that
that she
job
keeps me
for-
online.
She does that job for all of our districts.
Yes.
And for other districts, so
Yeah.
she's amazing.
we're
Yeah.
blessed then to have her.
Yes, we are
fantastic.
very
And
blessed.
she can add that to the minutes.
Yes.
Yeah, hopefully she will, yes.
Darlene, I'll also point out that we also skipped over public input.
We did, yes. We had no public present at this evening's meeting. Well, Tom is now like a quasi-member. I can ask if you have any public
I
input,
wasn't at the
Tom.
beginning, I don't think I am.
No, I guess you, well, yeah.
Well, you're not, not sworn in yet. So, giving you an opportunity here.
So with that, I'll just announce Tom, you must have brought a little luck with us this evening because we're actually ending ahead of schedule, and just about ready to wrap things up. So our next meeting would be on the fourth Thursday, which is September 23rd. And with no other questions or comments, I'll look to our process observer for a little readout this evening, Matt.
Yeah, I think it was a very efficient meeting that we had. I think our discussions we had in non-public were really good. There's a lot, the report that we went over tonight. That's always when we have this meeting, there's a lot of data there that the auditor goes over, and I think we stayed to the point, on point with everything, and overall it was a good meeting.
Okay, sounds good.
Can I add to that?
Sure.
That brings up a good point. I've never seen anybody who could read an auditor's report like he works for ESPN. That's exciting.
Yes.
As exciting as an audit can get.
Yep.
Yeah, it's a really good summary job, that he does. Where he goes through.
But he was
He does.
Yes.
How long has Robertson Green been our auditor?
It's been a while, 'cause I remember
Probably
them in-
since I think the year I started was the first year, and
Yeah.
so that's about 11, 12 years.
Wow, yeah. That's great. And when they come, they do each district.
Yes.
So they're
Oh,
here
yeah,
for like 3
and
weeks, right?
They are
They're like
great.
your
We
best
love
friends,
them. They're
so.
just very thorough about what they do.
But you learn a lot from listening to them.
Yeah, well, we do too.
Does he come,
yeah.
and how many people come for the audit? to do the
Usually there's like one per district, and then sometimes Tim is just overseeing, and then sometimes he's the one, he always does the co-op himself, so.
So do they come in over a 3-week period, or
No,
is it
they
just
just
they
come
all
in
come at once for 1
1
week?
week.
Wow, that's great.
And
They
he
get all
will
3
tell
done.
you that that's not true with all districts. I'm just gonna brag on my business office a little bit, because we come and we are prepared. And they come in and love what we do, and that's why they're only there for a week, and that's why our audit doesn't cost more, because I have the best business office on the planet.
Very good
Thank
to
you.
hear. Yay. And with that, at 7:48 PM, I will take a motion to adjourn
I'll make a motion to adjourn.
from Raul, seconded by Dave. Dave, your arm is up, but you're not speaking words. So you're the second. All those in favor?
Aye.
Great, 500. Thank you.